Good morning. Welcome to the Gold Spot, September 2nd, 2020, right before Labor Day week. Good morning. My name is Curtis Frank. I'm here with our guest and senior broker, Damian White. Want to unpack a few things real quick. Let's start off first. A lot of clients asking, did they miss the market? What would be your answer?
I would say absolutely not. I mean, there's a lot of factors that are still a tailwind for the prices of both gold and silver. Obviously, the prices have moved up a significant amount in the last, over the course of the summer because of all the extraneous factors that are going on. But we are approaching into seasonally the strongest time of the year for precious metals. So generally, the August, September, October, kind of drifting into the, what they call the Indian wedding season for, the Asian communities, Asian regions of the world use a lot of gold in their weddings and things like that. It starts taking natural supply off the market. So there's a higher demand during those times of the year. And we're obviously heading into some, we still have all the other tailwinds with zero rates, which are supposed to, as the Fed has been saying, lower for longer. And that's basically telling us that they're not planning on raising rates anytime in the near future, possibly for years. I mean, the bond market is estimating rates out until 2024, 2025, where they won't even start raising rates. Zero bound interest rates are good for gold. It's a natural carry, even for the biggest fund managers. It makes it a much more attractive asset. Prices are going higher.
That's a good point you mentioned with interest rates. So gold historically doesn't like higher interest rates, right? So if we're looking at the next 3 to 4 years of lower interest, if not zero, what can we expect for gold from a macro or long-term perspective? And then bring it back home to the next couple months of what we're going to see in kind of a tumultuous time. It appears that the stock market is pretty much ignoring a lot of the risk aversion. What would you say to that on a longer term perspective, and give me some what we can expect and protect ourselves in the shorter term?
Right. Well, there's a lot to unbox there. Certainly on a macro perspective is what we're talking about, longer or lower interest rates. We're in the beginning of probably a bull market in commodities in general. So that would take us out 8 to 10 years, I would say, on a macro level. So you're looking at a long-term hold, very low, early stages of a bull market. On a shorter term perspective, I think most of it's going to be driven a lot by political aspects right now. We're heading into the election. We're only, I forget, maybe 75 days away, something like that. The market, like you insinuated, is extremely complacent, almost at all-time lows in complacency. Everybody's frothing at the mouth to get involved in the stock market with Tesla and Apple and these other things that are creating this exuberance. As we're coming into probably one of the diciest times that we've seen in an election year or political stance in a long, long time. So I would not be complacent with the equity markets. I think we're due for a very big shock coming into this at any time now. And metals are going to be, gold and silver, precious metals are going to be a protective asset as we head into that. I mean, we've got all the other signs of inflation and the things that we've talked about. But the fear now and uncertainty and a stable, safe asset to park some money in, I think we're going to see that on the micro short-term basis as well.
Well, folks, tune in next week. We kind of unpacked a little bit here. I think what the plan is if you have options to get into this market, contact us. Do not sit on the sidelines, especially for the next couple months. Contact Scottsdale Bullion and Coin. Be happy to help. Have a great week, great Labor Day weekend. Thanks.